Guys, we're going to do a quick deep dive into equity, what all the buzz is about, what you need to know, how it's different to like a GMX fork, and where we've really gone and taken it to that next level. And I suppose I'd like to start off by first emphasizing how it's an integrated perp system into the Equalizer DEX, which is incentivized by our system. And I'm going to show you how that works in a moment. But to give you a rough idea, it's like we've basically got two sister products and we've merged them together. And then we've used the beautiful tokenomics that come with Equalizer, and we've then used them to incentivize these pools. So we're at the point now where all of the fees generated are going back to those veEQUAL holders, stimulating them. We've got a mechanism to lock more equal than ever. And we're generating all of these fees from a super efficient pool. And on top of that, we're enabling you to use perps or leverage trading on top of these pools. So I'm going to go through and explain everything to you. Going to give you a really, really deep dive into it and show you things like, you know, how great the statistics that run out of this program, and basically give you something to run through and have a look at and really understand what we're doing here. So obviously this is the pool that we've just launched with AXL USDC and FTM. It's performing really, really well. It's really been running about 36 hours and we've done over $400,000 in volume. We just claimed the fees before, but there's over $1,000 in fees already being generated. It's just super, super efficient and just a real fee printer. So popping through here, there's lots of info that you can have a look at. If you move down the bottom, what you can see, and this is just on our dashboard page, you effectively get to see the weight of the pools. Now, the way these pools work, or this pool works, is it has the assets at a weight specified for that pool. So effectively, at the moment, the way we've set the weights, and they are adjustable, we can add additional tokens as we grow. But we've got Phantom and AXL USDC at a 50% rate each. So what happens is that the pools are designed to try and keep them at those weights. And if they're not, then there's some incentives on the fees where they become cheaper to mint that asset and things like that, and also swap those assets. So it tries to keep the pool in alignment and uses Oracle pricing as well. So that's what makes them super, super efficient. It's a GMX pool. It's GMX, if you haven't heard of them before, are a very, very successful perps platform. And we've basically taken that pool and then adapted it to our system. So we haven't just done like a generic fork, which you've probably seen multiple times out there if you have any idea of how GMX works. What we've done is we've gone that step further and then we've integrated that into our system, and I'm going to run through and show you. But you know, there's some stats here to have a look at how the pool forms. But I'll go to the manage page, because what you do in this system is you actually buy a token called equity. All right, or you buy a position called equity, and that position is your part of the pool. All right, at the time. Now the pool does move around, as we saw there before, based on the swaps that are occurring in that pool, and it's done at the Oracle price. But what happens is when you basically mint a bit of it or a portion of equity yourself, you can mint that just by using, say, FTM. So you could come in here and just mint using FTM, or in this case, you could also use WFTM or AXL USDC. You mint, and it mints you this amount of equity, okay, depending on the amount that you're minting. And then what happens is it adds to this total supply there, and that's the pool that's used for all the traders and also for all the swaps that get done across that pool. You're providing equity, right? So what you do in this case is you mint it, and you can see it charges you a fee based on the balance of the pool and where it's trying to get that pool to. It'll give you discounts. So there are ways to find, should I be adding USDC to the pool, or should I be adding FTM to get the better rate? All right. So there's down here we've got a limit set. So we've got $1 million limit that we can mint up to at the moment, and as that increases, we can obviously increase that barrier as well. But I think you're starting to get a good understanding of how you're minting and getting the equity token. All right. And then at the end of the day, when you want to get or send your equity token back and take back some FTM or some USDC, you can do that, or whatever tokens in the pool at the time, by using the redeem function. And what you're doing there is you're burning your equity, and then you'll receive back, in this case here, if you were to burn 4.2 equity, then you would get back 20 FTM out of the pool. So you're going in at a certain price, and then equity manages it from then on as a consolidated pool. And then at the point when you want to redeem, you come in here and you remove your tokens from that pool. And I'm going to show you how that pool works in a deeper explanation, because the way it works is people trade against that pool. So the pool actually runs on a profit and loss. So not only does it comprise of the token makeup, it also is the counterparty to trades that occur on the pool. So equity is set up there to allow people to come along. We've got it set at the moment at 30x leverage. So people can come along and trade FTM at 30x leverage, and we're generating fees off that as well. So what you're basically doing is taking the other side of the trade for these leverage traders when they come along and take that leverage trade. And if those traders lose, then the pool value of equity increases as it's a profit and loss pool. Okay, so generally, as much as we all love trading and having a bit of fun, generally traders lose over time and the house wins effectively, and that's exactly how the pool works for equity. So again, it's not guaranteed that the house always wins, but in majority of cases you see that equity is the winner of trades overall, and that adds to the pool. So you get the winning, the losing trades, you get that to bolster it up, plus any fluctuations in the price of the assets. And on top of that, what we do is we give you farming rewards. So as if it wasn't enough to see, you go into this equity pool, you've got, you can LP this fantastic mix of tokens, and then on top of that, you get the P&L of the pool, and then we incentivize you as well with, in our case, equal and veEQUAL. So what happens here is you come in and you need to wait 15 minutes, okay? And the reason you have to wait 15 minutes is because in the contracts, there's a cooldown period for the Chainlink Oracle. So we use a Chainlink Oracle, and there is a cooldown period. So it'll come in after you mint that equity, and it'll tell you need to wait 15 minutes, which is fine. You wait, you stake your tokens in here, and then you start to earn equal and veEQUAL at a 30-70 split. So you're going to get 70% veEQUAL and 30% equal based on placing your equity into this farm here. So it's basically just going to be sitting there in the background accumulating these rewards for you. Hit the claim button, it's going to come up with a claim, and then it's going to claim that V NFT for you, and also that equal at the point where you make the claim. But all you need to do is stake it in here, come back a week later if that's what you want to do, and then claim your rewards. Very, very simple, but it's a great way to earn veEQUAL. And I want to sit on this for one moment, because it also adds this great dynamic to our platform, because now not only are we giving people equal, but we're giving them veEQUAL, our locked token. So it effectively increases the pressure on the flywheel, because people are now accepting veEQUAL locked as their reward for this pool. So we're going to give them a little bit of liquid equal, which, hey, they might choose to lock it again, they might choose to sell it, they might choose to put it on Tarot and lend for it. There's so many uses for equal, but we're going to give people 30% of equal. That's sort of like, okay, have some liquid stuff up front, but we're going to give you 70% veEQUAL for going into this pool, which is going to have a huge effect on top of our overall equal in the market. Okay, so we're basically shrinking supply from what we've just done with the reduction in our emissions, and then we're going a further step here, and we're giving out locked equal for this pool here. So whatever gets voted on this pool, 7% or 70% of what goes out gets locked. So if 10% of the vote goes on this pool, then we're going to see 7% of equal get locked immediately after every epoch. So I think you're starting to get a pretty good understanding on the system, that you can trade with leverage, what equity is, where you can stake it, and then we move on to our analytics. So pop on over here. We've got an analytics page which is full of data for people to go and analyze and have a good look at. And what I love about it is it shows all the options we have to earn fees for veEQUAL. So if you come here, you've got swaps, you've got minting of equity, you've got burning of equity, you've got liquidations, you've got margin trading, you've got that's the cumulative volume. So every time there's something, so we've got swaps, we've got margins, we've got equity minting, we've got burning, we've got liquidations. So as you can see here, there's just so many ways to earn through this new pool. And that's going all back to our veEQUAL voters. And I'm going to go through and show you where all that occurs in a minute. But there's just all this great data. So you just come down through here, you get a really good understanding on where the P&L is at the moment, what's happening, how the traders are going, who's been doing, how many users on the platform, where the swaps are coming from, who's doing all the swaps, what addresses are doing them, how much volume went through for the day. It's just a really, really good snapshot of all of the data. So you've got so much data, as I was saying at the start, to come back here and review, see where everything's sort of pacing with equity and how that's coming back and then rewarding our veEQUAL. So it's pretty simple. Equity is like an extension of our platform. It's like a sister integrated pool DEX with perps, and then you come back to our standard system if you're not familiar with it, where we vote with our veEQUAL. So there's other videos that we can point you to where we've got the 20-minute learn on exactly how Equalizer works. For this video here, it's more about understanding how equity works and then coming back here and understanding how we've integrated it into our voting system. So effectively, you come in here and now we've got this 120% APR sitting there for people to come and vote on the equity pool. So already, this is, we haven't really had a vote on equity, and it's 7.3% of the vote already coming through. We've almost got $3,000 worth of rewards sitting there for the equity holders, for the veEQUAL holders to vote on and earn. So it's a really, really good system with a huge flywheel coming back. And as you can see, within 36 hours, we've printed about $400,000 worth of volume, with over $1,000 worth of fees coming all the way back here to our veEQUAL voters. So we're completing that flywheel. We're adding a bit more fuel on the fire. And the best bit is when we're sending out those emissions, and Jay actually just put on the front page here to show you, which I was explaining before, we've done that reduction, that 2% reverse rebase into our system. And we're heavily on this path down to really constricting supply of equal. But not only are we doing this, there's another impact where 70% of that is getting locked. So we just saw that 7% of the vote was going to this pool. Imagine when it's 20 and 30% of the vote. We're going to be locking up 21% of the equal that come out. We're already reducing it hugely. So it's got that really big supply shock. And it's sort of like people are rewarded for locking up their equal now, because it's just going to be less and less and less for people to get, right? And then we've already got it locked as it comes out and goes into this new platform. So starting to see how we're using all the mechanics here to really, really put the pinch on equal and give those people that have veEQUAL an opportunity to earn more and more and more. And I can see this platform growing. We know the volume can be done on FTM there for a platform like this. It was happening only just weeks ago. We're in that rebuild phase. We're rebuilding back this system, but there's never been a better time to get the jump, get out there as the leading perps platform. It's almost like everything's been reset for us, okay? So we're effectively going out there now, and from what I'm seeing, we're pretty much up there with the most open interest. We're pushing to the top volume for perps, where, we've basically, within this little period here, where we've had a little hiccup for FTM, have just gone full tilt, and we've just done such a large scale sort of revamp. We've revamped all our pools to bring in the new liquidity types. We've just pushed equity out there. Like, we're beating other perps platforms to the pinch here. while we're doing all this stuff internally, the team has just been working tirelessly to get this to you. But effectively, we've got a system that generates a ton of fees. It's locking more and more equal than we've ever seen. We've reduced the emissions. Like, seriously, at the moment, everything's compounding together to give us a really, really opportune period and allowing us to continue to build that foundation as hopefully we look to build towards a bull market in the near future.